khair, good morning, good afternoon, good evening, wherever you are. I understand we have between 200 and 300 people joining us, which is a great honor. So allow me to introduce myself. My name is Cornelia Meyer, and I shall be leading you, guiding you through today's proceedings, as well as having the honor to moderate the panel discussion. First up, some introductory remarks on the tech functions. I think we have a slide coming up. Yes, let us see here, you can join us through Zoom or through YouTube. When you want to ask questions, use the Q&A button on the bottom of your screen for YouTube, and use the chat function for Zoom, and use the chat function for YouTube. Also, we have simultaneous translation into Russian, into Arabic, of course, and into French. So everybody can follow. So you will be absolutely be able to follow our proceedings, whatever your chosen language is. So without further ado, it's a great honor to welcome you to this webinar, which will look at how credit and political risk insurance is a catalyst for cross-border trade and investments. The program of the various multilateral development banks as lenders of last resort and takers of ultimate risk have become ever more important in the aftermath of the pandemic, especially for the least developed countries. The program offering of the Islamic Corporation for the Insurance of Investment and Export Credit, ISIC, our host today, has to be seen in that context, especially as it falls under the overall umbrella of the Islamic Development Bank's Strategic Preparedness and Response Program, which aims to respond to the pandemic's adverse economic impact on the economy of member countries, as well as restore and restart economic activity. Allow me to give you just a few further housekeeping remarks. You will first see a short introductory video by our hosts, ISIC, which will be followed by recorded welcoming remarks of His Excellency, Mr. Osama Kaisi, who is the CEO of ISIC and our host today. We wouldn't be here without him. And the recorded keynote remarks, which is a particular honor, by His Excellency Mr. Amadou Ott, Minister of Economy, Planning and Cooperation of Senegal, and the country's governor on the Board of Governors of the Islamic Development Bank. The main focus of today will be a panel discussion on how credit and political risk insurance can contribute to resource mobilization and in the post-COVID-19 era. Before we start the day, may I draw your attention to a survey we are conducting to find out how you feel we're doing with the seminar. You have been sent a link. Please fill it out. It's really important for us to hear from you. We now have the opportunity to watch the video from ISIC, which tells us what ISIC is doing in this area.
How can OIC countries build back their economies and sustainably recover from the effects of COVID-19? They can seek support for key trade transactions and investment opportunities that contribute to their national strategic priorities and catalyze a more resilient and sustainable future. The Islamic Corporation for the Insurance of Investment and Export Credit, also known as ISIC, was established in 1994 as the political risk and export credit insurance arm of the Islamic Development Bank Group. Since its inception, ISIC has served a diverse range of member countries worldwide. ISIC has worked to fulfill its mandate, promoting cross-border trade and foreign direct investment while working toward its mission to be the preferred enabler of trade and investment for sustainable economic development. ISIC's trusted reputation, expansive partnerships, and deep expertise reinforce the corporation's position as a leading multilateral insurer. Through the ISIC's diverse range of trade credit and investment insurance products, corporates, banks and export credit agencies can undertake strategic opportunities in new markets with increased confidence and security. The corporation's solutions help catalyze export growth, support the importation of strategic and capital goods, and secure foreign direct investment into member countries. By prioritizing strategic projects between 2 or more member countries, ISEEK also works to strengthen intra-OIC trade, investment, and information sharing. In times of crisis, ISEEK is adaptable, responsive, and efficient, swiftly shifting focus to bridge market failures and minimize disruptions for member countries, their businesses, and their citizens. ISEEK's expansive partnerships with national, regional, and multilateral export credit agencies, in addition to its partnerships with private insurers and associations, bolster the corporation's capacity to share risk and support more significant transactions with more profound impact. As the global community seeks to build back better, ISEEK is committed to creating a better future for OIC citizens by supporting strategic trade and investment transactions that contribute to achieving the United Nations Sustainable Development Goals and member countries' national development agendas. ISEEK, mitigating risk to build a better future for all.
This has been a really, really great introduction to what ISEEK does, ISEEK's activities, and it is to build back better and more sustainably for a better future. Now, without further ado, it's a great honor to welcome our host to give introductory remarks. Over to you, Your Excellency, Mr. Osama Kaisi, CEO of ISEEK.
Thank you, Ms. Meyer. Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to this timely webinar on the role of credit and political risk insurance and resource mobilization in the post-COVID-19 era. ISEEK is organizing today this virtual event in cooperation with the Ministry of Investments and Foreign Trade of Uzbekistan, the Investment Promotion Agency of Uzbekistan, the Chamber of Commerce and Industry of Uzbekistan, and the ISDB field representative in the country of Uzbekistan. This event, it is timely and it is a part of the 46th annual meetings of the ISDB group scheduled to occur during the 3rd and 4th of September 2021 in Tashkent, Uzbekistan, which the government of Uzbekistan hosts. I want to thank our partners in Uzbekistan for their invaluable input and support in realizing this important webinar. The World Trade Organization, WTO, recently published its flagship World Trade Statistical Review 2021. The report does somber reading, reflecting the ongoing disruptions in the health, social, and economic impact of the COVID-19 pandemic. It highlights recent trends in world trade and provides statistical insights into the impact of the pandemic on the global trade. The value of global merchandise exports declined by 8%, while services trade contracted by 21% in 2020. The trade recovery in 2021 is expected to be fragmented, with the unusual geographic differences where developing countries are in the lowest percentile of any recovery. The World Trade Organization Director General maintains that rapid and equitable access to the COVID-19 vaccine is a prerequisite for a full recovery of global trade and investment. Trade and investment insurance and guarantees are intrinsically linked to the global trade and infrastructure development, and we have seen that during the pandemic, the uncertainty and weakening capabilities of the public and private sector plays have made mobilizing resources more challenging, especially in the least developed countries and corporates that operate in these jurisdictions because of the elevated risk. Without necessary de-risking tools, such as credit and political risk insurance, resources are being mobilized at higher costs and premiums. The multilateral development banks and specialized multilateral insurers, such as ISEEK, has risen to the challenge by innovating cost-effective solutions through enhanced, non-traditional result-based partnerships between ECAs, multilaterals, and private sector insurers and international banks. Today, let us explore together these exciting new developments to see how we can enhance and add further value to risk mitigation towards pushing back against the impact of the pandemic through boosting trade and FDI flows. The use of ISIC de-risking tools certainly stimulates economic recovery in member countries, guided by the 3 Rs: respond, restore, restart, approach of the ISB Group's COVID mitigation strategy planning and response program. Ladies and gentlemen, we have an impressive lineup of inspiring speakers and panelists experienced in economics, finance, and credit and investment insurance trends. We are honored to have them join us today. Ms. Cornelia Meyer, the Chairman and CEO of Meyer Resources, will moderate the webinar, and we look forward to your active participation. I hope you find today's proceedings and discussions useful. I now hand over to Ms. Meyer, our moderator. Assalamu alaikum wa rahmatullahi wa barakatuh.
Well, thank you very much, Your Excellency, for your very inspiring remarks and for telling us, how you rose to the challenge and how you're de-risking doing business in the member countries. I would now like to, we now have the honor to have a recorded keynote address by His Excellency, Mr. Amadou Hott, Minister of Economy, Planning and Cooperation of Senegal, and the country's governor on the Board of Governors of the IDB Group. And let us just also tell you that it's important to the IDB to hear from its member countries and get guidance from their governments. So without further ado, we could now play the welcoming remarks or the keynote remarks by His Excellency, Mr. Amadou Hott.
Ladies and gentlemen, good morning, good afternoon. I would like to thank ISEC for its constant support to IDB's member countries. I welcome this relevant initiative to organize this webinar. Indeed, during this pandemic period, our economies have been facing significant financing needs to meet the challenges of healthcare and recovery. So all the levers that can help to mobilize more semi-concessional resources must be used. De-risking tools are useful to attract private capital at a favorable cost. In the context of the COVID-19 pandemic, many countries, including Senegal, suffered from a slowdown in economic activities. Thanks to Senegal's economic resilience program and the help of our international partners, we were able to experience positive GDP growth despite the continent of Africa experiencing its first recession in more than 2 decades. To draw on lessons from the pandemic, optimizing our borrowings becomes a crucial exercise. Mm-hmm. The countries are suffering from economic turmoil, which is eroding investor confidence, especially in developing countries. Therefore, de-risking tools are crucial in these difficult times to give more comfort to investors and reinforce our economic fundamentals. Senegal has benefited from ICEX insurance to mobilize resources from private lenders, given the scarcity of concessional lending. The risk mitigation tools give comfort to the investors and allow them to deploy more capital in impactful projects and to extend the maturity beyond what is usually offered by international commercial banks. Thanks to ICEX risk mitigation tools, we managed to secure private financing for the rehabilitation of a major water collector system in the capital city of Dakar. The financial structure was innovative because it enabled the Republic of Senegal to borrow in local currency. That is very important. ISEC is currently in discussions with the government of Senegal in two initiatives: the COVID Guarantee Facility and the ICERI, the ISEC ISFD COVID-19 Emergency Response Initiative, in order to mobilize more private capital for the procurement of essential goods and medical equipment. ISEC is also contributing to the AVAT facility of the African Union led by Afri-Exim Bank. Senegal is acquiring 5.3 million doses of Johnson & Johnson vaccine. We count on ISEC to help accelerate the supply of vaccines as soon as possible. Partnerships are very key to attracting capital efficiently. In this context, our country has benefited from the financing of Industrial Development Bank of South Africa, covered by ISEC, for the construction of the Dakar International Airport, IABD. Senegal also benefited from two ISEC covered loans extended by Turkish Exim Bank for the construction of the Dakar Market of National Interest and for the construction of an expo center, as well as for the construction of a business hotel in the new city of Diamniadio. Without ISEC support, many of these investments would have taken time to achieve financial close, or probably at a much, much higher cost. Thank you, ISEC, for your support to our countries. Thank you all for your kind attention.
Well, if I've ever heard a really resounding endorsement of the activities of ISEC, forgive me, it was this one. Thank you very much to His Excellency, Mr. Amadou Hott, for giving us this really, really good keynote address. Now, we are now going to the main part of this webinar, which is a panel discussion where His Excellency, the CEO of ISEC, Mr. Oussama Kaissi, will interact with major C-suite actors of major partner institutions. The panel will look at the increased importance of guarantees and political risk and export insurance schemes for member countries in the aftermath of the COVID-19 pandemic, which affected the least developed countries particularly hard. Increased risks and uncertainty combined with already constrained institutional capacity has considerably driven up the risks and the costs of doing up in these countries. The panel will investigate how ISEC can support both the private sector and governments in doing business in jurisdictions perceived as economically and maybe also politically risky. It will also look at how the IDB can partner up with institutions such as multilateral development banks, export credit agencies, commercial banks, commercial insurance companies, multilateral insurance companies, and obviously development financial institutions. The audience can ask their questions through the Q&A button, as I've said before, on Zoom and the chat function on YouTube. Would you, when you ask your questions, please identify yourself, your institution. Also tell us whom you would ask to answer the question, and keep the questions as brief as possible, because we want to give as many people as possible an opportunity to air their questions. So it gives me now great pleasure to introduce our panel members. They are, as said many times before, His Excellency Mr. Oussama Kaissi, who by now needs no further introduction, Mr. Yerdan Bekoshin, who is Vice Chairman of the Board of Kazakh Export, a major export credit agency in the CIS region, Mr. Ahmed Ben Yahya, Executive Director, Foreign Financial Institutions and International Cooperation of BMCE Bank of Africa, and Mr. Stephen Gargiulio, Head of Global Markets, ICBC Standard Bank. Let us kickstart session with the host, as we should. Your Excellency, the pandemic has hit the economies hard. Among the member countries, the ones who are resource exporting were hit harder than the ones who were not. But now that we go into the recovery phase, the IMF has predicted a two-pronged recovery where developed countries will recover much more quickly, be back up to speed for where they were before by 2025, and developing countries are lagging mainly because of the lack of access to vaccines. Now, how do you look at that development? How has it impacted the way you do business? And where has your main focus been in terms of countries and sectors during the pandemic? And where is it now in the recovery phase? Over to you, Your Excellency. Sir, I think you need to unmute your button. Okay.
Can you hear me now?
Yes, sir.
Okay, thank you, Ms. Meyer. Global gatekeepers, the likes of the IMF, they revise the macroeconomic indicators regularly. This is partly because of the evolving nature of the pandemic trajectory that we are witnessing today, with new waves of infections and variants. The two-pronged growth forecast that you have mentioned is understandable, given the huge economic and inequality gaps between the developed and the developing economies. As we have heard previously, the IMF projected the global economy to grow 6% in 2021 and 4.9% in 2022. Emerging Asia and African countries, where most ISEC member countries are located, are most adversely affected. By contrast, and as we have heard, from His Excellency Minister Hutt, that the forecast for advanced economies is revised upward, while Africa might be facing, a downturn in their economies that hasn't happened in decades. These revisions reflect pandemic developments and changes in policy support. This is why rapid and equitable access to COVID-19 vaccine is a prerequisite for the full recovery of global trade and foreign direct investment flows, especially in developing countries. Sub-Saharan Africa, as we mentioned, will be the world's slowest growing region in 2021 and risks falling further behind as the global economy is rebounding. Forecasts are not simple as it seems. The pandemic hit Uzbekistan, and I mentioned here Uzbekistan as an example because Uzbekistan is our focus. We are holding our annual meetings in a couple of weeks there. This pandemic that hit Uzbekistan, for example, it hit it very hard initially in the first half of 2020. But due to the strong government response and swift response, the economy rebounded in the second half of 2020 and recorded a 1.7% GDP growth, which was, I might say, one of the few positive rates recorded in the world in 2020. The government of Uzbekistan original estimates was 5.1% as a GDP growth in 2021, which has changed to 5.5 to 6.5% on the back of a strong or stronger than expected economic recovery. Despite a mini rise in COVID infections this July, the government still maintains that this remains achievable. In terms of the business outlook that you have spoken of, we remain confident that we can deliver our continued support to our 48 member countries while using innovative risk management solutions to help them navigate the pandemic and ongoing health, economic, and social impact. ISEC, if I may say, responded swiftly to the pandemic by forging strategic partnerships, ensuring the continuance of critical trade flows and creating innovative de-risking solutions to help mitigate fallout in member countries. We have introduced new operational measures as well, like regular member country vulnerability tests. We have introduced profile or portfolio stress testing. We have as well tracked overdues from member countries and on the commercial side as well at portfolio level. And we have exchanged early warning exposure experiences amongst the Islamic Development Bank Group entities. And as well, we have implemented a defensive investment strategy. Follow up on that, what we have achieved since the pandemic started, we have contributed $643 million in insurance coverage toward implementing the group's COVID mitigation strategic preparedness and response program. ISIC and IDB as well, we jointly launched a $2 billion COVID-19 guarantee facility to support the private sector during the next 5 to 7 years. We have partnered as well with our internal fund within the group, which is the Islamic Solidarity Fund for Development, ISFD, which aims to eradicate poverty in member countries, to launch the COVID-19 emergency response initiatives to preserve the flow of essential imports, medicine, medical equipment, food supplies, and strategic commodities to member countries and beyond. ISFD, under this program, has allocated a grant to ISIC that could support some $400 million to procure urgent product needs, while ISIC is leveraging this grant through its financial sustainability programs. Looking ahead, ISIC is focused, and we are maintaining that position to achieve selected strategic objectives to best support our member countries, their businesses, and their citizens ultimately. The pandemic continues to be a significant issue throughout member countries, limiting trade and investment, straining healthcare services, and keeping businesses shuttered. We will continue to boost essential goods and services through the above initiatives and support SMEs and infrastructure projects. Thank you.
Thank you very much, Your Excellency. This has been really very insightful, and it's very impressive to have acted so quickly and upped your program and risen to the challenge. And I'm sure your member countries and the private sector in these member countries is very, very grateful for that. Now, let us move to an export credit agency, a big one, Kazakh Export, who is very big in CIS region, obviously. Mr. Yedan Bekoshin is the vice chairman of the board. And I just have a very simple question to start to ask you, which is, how has the environment, your environment in the business of export credit changed due to the pandemic? Which sectors are you now now focusing on primarily? Over to you, Mr. Yardan.
Thank you, dear Cornelia Mayer. Good morning, good afternoon, ladies and gentlemen, dear colleagues. In terms of environment changes due to the pandemic, we have managed to respond in timely fashion. Most of our Kazakh export staff was transferred to remote mode of operation when first case of coronavirus was reported in Kazakhstan. From that perspective, we have prepared well. Moreover, pandemic has prompted Kazakh Export to find ways to automate business processes, I would say in an accelerated mode. For example, we started to implement the process of signing our insurance agreements via online platform. Meetings of authorized bodies, as well as other meetings for internal, externals, are happening over online mode via WebEx, via Zoom, which has significantly rationalized the use of our working time, minimized running costs and the like. Proud to say that all our meetings of the management board are happening in the online mode, and all meetings minutes are being fixated by personal electronic digital signature. So we are actually moving to the paperless environment. In terms of way forward, we are aiming to implement the same approach to all our collegial bodies like Underwriting Council, Asset Management Board, and others. In addition, it is important to mention that in year 2020, we have provided the highest insurance coverage in the history of our company. So our new commitments were more than 350 million USD. So personally, to me, it's the best evidence that we have managed coronavirus crisis well. In terms of our sectors that we are primarily focusing on, our mission is to support the growth of export of non-resource commodities, works and services in the priority economy sectors, and formation of the practice of financial insurance and non-financial support to Kazakhstan companies. So priority industries that supported by Kazakh export are mechanical engineering, finished products of agro-industrial complex, metalworking, chemical industry, light industry, and export of service works and the like. Thank you.
Well, thank you very much. It's been very impressive how quickly you moved online. Many could learn from you. Many institutions could learn from you in that one. Now, you are cooperating with multilateral development banks, with many actors, and especially also with ISIC. Can you tell me which programs, which institutions, which programs you find particularly have helped you particularly through the pandemic, and why has it been so? Because there may be learnings for everybody here.
Yes, we are cooperating with MDBs, and as a rule, when it comes to MDBs, MDBs provide the financing to Kazakhstan exporters, and Kazakh export will provide an insurance coverage. In other words, Kazakhstani export will be the policy holder, and Kazakh export will act as insurer, and MDB as a beneficiary. For example, we have completed transaction previously with Eurasian Development Bank, where working capital facility was provided to our prominent Kazakhstani exporter. In terms of ISIC, first of all, I would like to highlight that ISIC is our strategic partner, and we're always looking for ways to expand our operations. As many of you know, in the year 2018, we have successfully signed a reinsurance agreement with ISIC, where 70% of the risk was reinsured with ISIC on facultative basis. Happy to report that we are actually expanding our operations. Without disclosing too much information, I'm glad to highlight that we are working on treaty share agreement with ISIC. And the main parameters of the transactions that the insurance will be for insurance coverage that Kazakh export is providing for banks in Central Asia, Central Asian countries. ISIC is recognized around the world for its financial strengths and wealth of experience. When we will have ISIC behind our back, it will help us to expand our operations and increase our new commitments. In addition, the fact that ISIC is willing to do business with us is also confirmation that our organization is actually moving in the right direction. Okay. I hope that once we finalize our agreement, I will have a chance to give more details and share with you our positive experience. In conclusion, I want to add a few words about ISIC. As many of you know, ISIC is the main driver behind Aman Union, and Aman Union is a professional forum assembling commercial and commercial risk insurance. Aman Union is a perfect platform to help each other to find solutions on these complex issues. In times like this, the cooperation and communication becomes critical. Main takeaway: in order to overcome obstacles that we are facing in a challenging times like today, we have to act together and be proactive as possible. I personally want to thank ISIC for their help, and especially Mr. Osama Kaisi for this continued support. I'm mindful that we have to stick to agenda, and I'll be happy to answer to any questions that you will have. Dear Cornelia, back to you. Thank you.
Thank you so much, Mr. Yerdan. This has been great, and it's been great to see how closely you work with ISIC. In preparation of this program, I found that everybody is doing more with ISIC. ISIC is becoming more important in this post-pandemic time. I just wanted to ask, is Mr. Benyaya online? No, he seems not to be online. If Mr. Benyaya is not online, we will go first to an international, a global bank, and then go to the African bank, because he may come back online. So let us now go to a really big international global player and see how it cooperates with ISIC. Mr. Stephen Gargiulio is the head of global markets at ICBC Standard Bank. Without further ado, Mr. Gargiulio, how has the pandemic changed the way you do business, especially pertaining to trade finance and FDI? Tell us why support from multilateral agencies is important for you, because they're the ultimate takers of risk. And just tell us how you see this situation develop in the post-pandemic world. Over to you, Mr. Gargiulo.
Well, first of all, thank you, Cornelia, and thank you to and a big hello to all the participants, distinguished guests, excellencies, and so on. I would, to getting to sort of the point of your question, obviously the pandemic has restricted quite a bit face-to-face communication because of the travel restrictions. And a lot of our business is actually conducted via direct contact with our counterparties and our partners. So it has made things ultimately much more difficult to develop relationships and to progress transactions. That's why the role of entities like ISEC, and in particular ISEC, has been fundamental for us, because in a way, you mentioned ultimate risk takers, but for us, it was never the ultimate risk taker. It was about partnership and risk sharing. And it is a strong message that who we work with, we are also happy to take risk alongside them. But in the particular instance of ISEC, ISEC is so well informed about what often goes on the ground. They have very good relationships with their partner countries. And this allows us to have comfort that beyond our analysis, that ISEC actually has not only skin in the game, but they have quite a very good inroad into the country, and they can give us the comfort to ourselves invest. And that is so important, because as you look to what we do, we are ultimately risk takers, but we are also sharers of risk. Yeah. And once we take the decision to move in, we have our multitude of investors, and our investors are all over the world. They're in China, they're in the United States, they're in Europe. And so what happens is that we're able to talk to them and give them comfort about, for instance, in the specifics, Uzbekistan, where we have grown. It's one of our fastest growing countries. We have a very big commitment. We've had many senior people visit the country. And if there hadn't been this hiatus of COVID, we were hoping to do more. As it is, we have done now some trades, and we have been able to attract other capital into the country, because we had the comfort ourselves working with ISEC that it was good risk. And we were able to conclude a very important transaction, and we hope to do quite a few more.
Well, that's great. You've just taken away sort of the second question, which is give us some examples of where you've cooperated with ISEC. But what I'd like to know is that you've given us one example. Maybe you can give us another example, and maybe you can also look ahead and say, what else could you do with ISEC? Well,
that is a very good question, and I think that we, as the type of bank we are always looking for innovative financial solutions. And one of the things that has been a pleasure working with ISEC is that they are extremely flexible and creative in their own right. And it allows us to adapt much more easily to what our clients' needs are and to what our needs are, because as a bank, we have restrictions at times around capital, around use of balance sheet. Yeah, and with ISEC, we've been able to work extremely constructively to find solutions to these things. We have a big pipeline. We are not only working in Uzbekistan, but we hope to widen the scope to other Central Asian countries. And we would, I can tell you clearly and transparently, we would not have that comfort. We would not have the level of comfort we have now if we weren't working with ISEC, because as we consider them partners, we also get comfort from the fact that they know these jurisdictions. They have direct contact with senior members at times, both in industry and in government. it just gives you an added layer of facility in working in these areas, in these geographies.
Well, that's really great to hear. And then what I hear from you is, you know, it's also, you also admire the flexibility. It's not necessarily so that big multilateral institutions are flexible. So all kudos go to ISIC for both the contacts, the support, and the nimbleness and flexibility. So that's really fantastic feedback. So now let us go to an important part of the IDB portfolio of countries, which is Africa. There are 27 member countries across Africa, both Sub-Saharan Africa and North Africa. And let us now introduce. I have a question. Is Mr. Ben Yahya on, or do we have Mr. Amin Lahamsi? Okay, I guess we have Mr. Lahamsi. Do I see that correctly, Mr. Lahamsi?
Yes, I'm here.
Okay, that's great. We have the honor of having Mr. Amin Lahamsi, and I have something in common with him. About 25 years, I had exactly the same business card as you, only it read Citibank. So I was at the director at the cross-border finance group in Citibank 25 years ago. It's a long time ago. I'm an old woman. But without further ado, Africa is so important, and you are the director of cross-border finance in institutional group in BMC Bank of Africa, which is a truly Pan-African bank. You really operate across Africa. There are very few banks who do that. So let me ask you, Mr. Lahamsi, how has the pandemic affected your economies and business environment in the countries in which you operate? And especially because you have so many different countries, can you see where it's been worse, where it's been less terrible, and how you see it evolve going forward? Do you share the IMF's concerns about this two-pronged recovery, where the developed economies are powering ahead and the developing economies, especially Africa, is going up much slower speed? Over to you, sir.
Indeed, like other regions in the world, the COVID-19 pandemic and associated response measures had significant consequences on African countries' economy. As a result, many countries have suffered from the decreased global demand and commodities resulting from the global lockdown and disruption in supply chain. However, the region has suffered less economic losses than the other parts of the world. The virus spread slower, and the case fatality rate for COVID-19 was lower than the global average. More generally, the implication of the health crisis depends on the nature of the economy in each country: tourism dependent, oil exporting, and other resources. And by region, in West Africa, the EMOA economy has been relatively resilient to the crisis. And in fact, despite the drop in income from export products, many countries in the zone maintained positive growth in 2020, thanks to more targeted and less restrictive containment measures. In East Africa, the economy of the Eastern Africa community would have posted only a very slight recession in 2020. In Central Africa, the impact was higher, and the expected growth would be a recession of minus 3.1% because of their dependence to the oil pricing that has dropped down and the commodities price. Regarding the financial sector, as of now, the indicator does not suggest any deterioration. However, for the banking sector, indeed, the profitability and adequacy ratios are overall satisfactory. However, given the credit moratorium, the impact would not be seen yet.
Mm-hmm.
In 2021, the unseen recovery and equitable access to vaccine would have a huge impact on the economy of the African countries. Indeed, the lack of access to vaccines would slow the short-term recovery. While some advanced countries have obtained enough doses to immunize their own population multiple times, many countries in sub-Saharan Africa are struggling to immunize the essential frontline workers.
Yeah.
In addition to the slow vaccination campaign, most countries of the region have not been able to take the sustainable fiscal and monetary support measures that are now driving the recovery in advanced countries. This uneven recovery would also be actually accelerated by a new outbreak of cases contamination driven by the increased spread variants. Some countries in the region, such as Rwanda or Uganda, have already issued restraints.
Well, this is very good, and it's very. I mean, it's just sad to hear that in the 21st century, our world is still so inequitable, and that it has driven, and you know that inequalities have been exacerbated by the pandemic. We really, as humanity, should have gone further. So thank you for that assessment. Now, I have a second question for you, sir, and you know I have a second question for you.
I know.
And let me just say also that BMCE Bank of Africa is an important partner to ISIC, and you're working on expanding the relationship. Like everybody wants to expand the relationship with ISIC. Mr. Kaisi is the most popular man in town, it seems. I would like to know from you how looking at the various political risk insurance offering and credit risk insurance offerings, how important are they, and in which countries are you working most closely with ISIC? What programs do you find most useful and particularly important?
Okay, first of all, I would like to give you a quick overview about a Bank of Africa, which is one of the most Pan-African financial groups with operation in 32 countries in Africa, Europe, Asia, and North America. With an extensive portfolio of brands and subsidiaries, its universal banking business model has seen it diversify into a variety of trade, business, and investment banking across Africa. In pursuit of Bank of Africa vision and ISEC mission as a multilateral institution to facilitate trade and investment between member countries and the world, the two parties have joined their efforts to overcome the COVID-19 pandemic. By consequence, both institutions have signed in January 2021 a memorandum of understanding to extend collaboration facilitating trade and transaction and financing sustainable and social infrastructure projects throughout Africa. In fact, during the year of 2021, and despite the international crisis, Bank of Africa was the first African bank to use all credit insurance products proposed by ISEC to financial institutions. NHSO, non-honoring sovereign obligation, policy proposed by ISEC to cover the risk of non-payment, with financing with the first investment operation realized by ISEC with the Moroccan bank finalized on 2021. Moreover, with the continuous work of innovation, Bank of Africa and ISEC have recently finalized a local financing for the counter value of 81 million euros in favor of the Republic of Senegal, acting through the Ministry of Finance, for the construction of 6 university campuses and medical centers in rural cities of Senegal. The project will enable students to have decent accommodation while enjoying green energy and potable water. Bank of Africa uses also other products proposed by ISEC, such as bank master policies, Sharia compliant, and default credit insurance policy. The uncertainty created by the actual context have resulted in increased demand for trade finance instruments to attenuate the commercial risk. Unfortunately, the regulatory requirement in terms of capital adequacy had a negative impact on the capacity of Bank of Africa to respond positively to the increasing demand. The affiliation of ISEC to the Islamic Development Bank Group, along with its investment international rating, has allowed Bank of Africa to increase its capacity to facilitate trade transactions for its partners and increase the deferred payment, especially for first need commodities. So for the upcoming year, we are confident on our collaboration with ISEC to increase this collaboration and facilitate trade transactions for all implementation of Bank of Africa in Africa, and also other countries targeted by our good bank.
That is very, very good, and it's very So good to hear how you're expanding and your cooperation. I see everybody's expanding the cooperation. It's getting a lot, better as cooperation, and the pandemic has actually, made ISIC much more in the game. So with that, I'd like to ask His Excellency Mr. Kaisi, you've now heard from 3 important partner institutions. How would you like to respond to what you've heard?
Thank you, Ms. Meyer. I am encouraged by what I have heard from our distinguished panelists. Definitely increases our resolve to work harder in forging vital partnerships globally, and specifically here, we're talking about Central Asia and Africa, where majority of our member countries are located. Supporting the intra-OIC trade is a priority for ISIC. Since our inception 28 years ago, we have supported a total of $28 billion in intra-OIC trade as of the end of December 2020 across the regions of our membership. The majority of the export originated from Arab Asia, Europe, and Central Asia, while Africa and Southeast Asia were the leading destinations for intra-OIC imports. We recognize the importance of supporting exports from Africa and Southeast Asia and South Asia, and increasing intra-OIC exports from these countries. Hence, we are committed to enhancing our activities in Uzbekistan and Central Asia, and to foster regional economic and development cooperation and integration. And that remains a strong commitment from our side. The national ECAs at the level of the member countries and globally for non-members as well, they play a crucial role in supporting trade during the pandemic, this crisis, or any economic crisis per se. ISIC has partnerships with 37 ECAs and insurance companies globally, and we are always forging these close-knit relationships with the ECAs, like-minded like us, and insurance companies that can help us utilize our financial flexibility through reinsurance programs to leverage our capital in order to support more of the member countries. We have already a 10-year ECA experience with Kazakhstan since we signed an agreement with Kazakh's Export in 2013. And we have never looked back on providing the credit insurance, reinsurance, and technical assistance that is required from our side. And we have seen all the cooperation that is needed from the management of the Kazakh export. In June of this year, we have signed a similar agreement with the Uzbekistan National Export and Import Insurance Company, Uzbek Invest. This is a fundamental building block for ISIC to support export development and foreign direct investment inflow into Uzbekistan. Again, since our inception, the percentage of our total business insured in Asia amounted to just about $38 billion, constituting close to 49% of the total production of the institution. In Africa, the figure is around $43 billion, or representing close to 32%. This means that more than 80% of the business that we have transacted and insured has been directed towards Asia and Africa. In respect of the relationships that we have, and they are present in the room with us today, we pride ourselves on the excellent relations that we have with BMCE Bank of Africa, and we have been very happy to see that several transactions has been closed in benefits of the member countries. We have, as it was mentioned, included, in this achievement, the writing of ISIC of the first ever BNP Murabaha facility, and we provided 50% cover of the $25 million syndication trade finance facility in favor of a Nigerian bank to secure vital food imports. As well, we have secured a $9 million in LC confirmation and insurance to secure urgent strategic imports to Senegal. Similarly, we continue by having another $24 million in non-honoring of sovereign financial obligation risk cover, and this is for the renovation of a school, science school in Cote d'Ivoire, and a $19 billion bank master policy facility to support Tunisian energy sector. In 2020, ISIC as well supported 32 least income countries and least developed countries, bringing the total number of banks that ISIC supported to achieve that to 92 banks globally, and not just at the level of the membership of ISIC. Our relationships with regional, international banks and local banks are active in our member countries and beyond, will continue to increase to support us achieve our mandate. We have recently provided non-honoring of sovereign financial obligation to our partner ICBC, Standard Bank, against a $50 million financing facility to Uzbek Industrial and Construction Bank for all lending to SMEs. And this is, again, an extremely important part of our support to local industry, and specifically the SMEs during this period, that they are the backbone of every economy globally, and that was hit very hard in our member countries and globally, SMEs, and in the export sector, specifically in Uzbekistan. And we do look forward to more cooperation. I'm happy to hear our colleague, Mr. Stephen, elaborate on this. We look forward, like I said, to do more cooperation in this aspect. I'd like to say this is who we are. This is what we do. This is who we partner with. I'm happy to hear, the opening remarks from His Excellency Minister Ott. That embodies who we are, embodies our motto. These are partnerships for impactful development, which we will strive to continue and to enhance. And for that, I'm very thankful to all our partners. Thank you.
Thank you very much, Your Excellency, and this was really very helpful. It is about partnership. It is about intra-OIC trade, and which actually the first question I've already received is about intra-OIC trade, and it goes to you. I will come to that, but before I come to that question, I just wanted to let you know that you should use the Q&A function on Zoom. You should use the chat function on YouTube to ask your questions, and they will be funneled to me by the competent staff of ISIC. Now, I would also like to say, please identify yourself, your institution, and also who you would like to ask the question. And I have the first question. We are very efficient here. This is great. It's credit and investment insurance and guarantees are inextricably linked to global trade and infrastructure development. The OIC target is for intra-Islamic trade to reach 25% by 2025. I guess they have the number from the IDB. This is, in your view, is this how can ISIC support that? Is this achievable? And how can ISIC leverage its position as a Sharia compliant to leading Sharia compliant ECAs? So please do tell us, sir. To you, Mr. Kaisi.
Thank you, Cornelia. ISIC was created in order to enhance the trades among the member countries of the OIC. ISIC was created in order to promote and facilitate the FDI inflow into our member countries, and similarly, in order for us to advance and to promote Islamic finance globally. This is a part of our mandate, and this is what we have done. Rightly, the figures that you have mentioned, the decision that was taken is that OIC intra-trade should reach 25% by the year 2025. Where are we from that? What are we doing? And what are the challenges that we are facing as institutions within the Islamic financial sphere? What are we doing? And what should we do? To retract a little bit and to go back and to take a holistic approach and view of where we are. One cannot examine the way forward without looking at the challenges that we are facing as institutions, be it multilateral institutions, be it commercial financing institution. And similarly, we look at the governmental aspect and how they play a role in paving the way. Because while I do believe that partnerships, like we are saying, between government and private sector should be solidified in order for us to achieve our impactful developmental goals, we have to similarly see what role should the government play at the outset in order for them to pave the way for such cooperation to happen and for such development to happen as well. We always fall back and we look at these countries where we are operating, and we deal with them on hub and spoke model. When we look at the capability of regional institutions that they are working, whether it is in North Africa, or Sub-Saharan Africa, or Southeast Asia, or at the GCC level, or at the Arabic level, Arab region level. And we see that there is a lot of disruptions and disengagement between, at regional level and whenever you are trying to connect these regions together in order to do more. One of the initiatives that ISEC came up with 4 years back, and I do recall we have presented it to the COMSEC. It is the body that is responsible, for the trade and investment promotion at the level of the OIC. We have submitted a proposal which was accepted by the ministerial sessions back in 2018. And this is for the establishment of a business intelligence center. And we felt that this is needed because of the absence of vital information that the likes of ICBC and the likes of BMCE and the likes of other banks, that the one they all want to expand, there is not enough information for them to make their decision to proceed. And I'm talking here about credit information, whether through bureaus that are government supported or they are on the private sector. And when we did the study shows that there is many countries that are at par with international players and international markets, and there are, again, many that are not even at the threshold of breaking ground to enter and to provide this information. So I answer your question from there to say governments, they have an important role through their finance ministries as a policy making, through their central bank, in order for them to start facilitating these data in order for banks and ECAs and the likes of ISEC to do more. We are privileged that we have that preferred creditor treatment with our member countries that gives us access to information. And this was mentioned a couple of times today from our colleagues. And that gives us access to information as well. But that does not provide us with the data in order for us to do more on the ground, in order for us to move toward linking markets together or building regional hubs that are sustainable from that. Regulation is important. This is something that we have seen that our member countries are lagging behind in that. And we hope that we will be able to help and to support a part of what we do at the group level, be it at the Islamic Development Bank and the sister entities and specialized body and organs at the OIC is for us to help set up regulations and policies. And this is where more and more we would like to engage with governments to do that. ISEC has achieved its share of what we have committed in supporting intra-trade, and we will definitely achieve what the targets that we have put for the institution and go beyond the 25% for ISEC share in order for us to do that. Again, the partnerships are very important. And like I said, I reiterate that we are extremely engaging. We are extremely flexible where we can be in order for us to deliver on our mandate and to support the banking institutions that are from non-member countries and member countries in order for us to do more on the ground and to support trade and investment inflow. I just would like to finish with one sentence here to say we are facing COVID today. We have seen for the last few weeks natural calamities and catastrophes that are hitting from fires and from rain and flooding that have not spared lives, and people lost their lives globally. We are seeing an environmental catastrophe, and in addition of all of this, we have conflicts that are happening globally as well. So I do not think in the near future we have to worry only about COVID and its repercussions, that they are with us for the foreseeable future as we are facing new variants and new cases that are happening on a daily basis globally. But we have to take into consideration that some of the issues and the crises we are facing today are here with us, and we will have to deal with all of these crises collectively, and that will isolate markets from each other, while there is more and more need for countries to lift barriers and to engage at global level in order for us to bring about the resiliency of the economy, because no more fiscal policies of more printing of cash is going to help if we continue doing this way. Fiscal stimulus has worked in some countries, but the repercussions are going to be extremely negative on the world economy. And this, as I feel it, it will be seen in the next 12 to 18 months.
Thank you so much, Your Excellency. And thank you especially for pointing out we should look beyond COVID, because COVID is not the only thing. If we want to achieve the 17 SDGs, it is not just about COVID. Thank you. And thank you also for sort of highlighting just the big role you play also in helping, institution building or capacity building by providing that information exchange. I think that's something very, very important. Now, gentlemen, I have to be very strict on you, and I'm very sort of time driven. I should have been born as a clock, not as a person. I have about 1-2 questions depending on how we go, because we need to end on time. The first question I have here is for Mr. Yerdan, and please answer in 3 minutes only. You're very good at answering in 3 minutes. It is, what stimulus actions has Kazakhstan government done for the SME sector? How are you looking to support the SME sector going forward?
Well,
and after all, SME sector, that's where the jobs are. We all need jobs. We have young populations. They need to be employed.
It's a really good question. Thankfully, what happened in Kazakhstan, our government is very mindful that we need to provide support, and giving back our history, we became very active in the last 5 years or so. And in terms of what's happening in terms of supporting our SME, we currently working on expanding our state guarantee. Actually, we never had state guarantee for ECA. So what we as a Kazakh export did 2 years ago, we actually introduced new legislation which allowed us to get corresponding guarantee for 300 million USD. And from that point onwards, we have managed to provide more commitments to our clients, especially to SME. And now, during this year, we aiming to expand our state guarantee for another 300 million USD. So in that sense, we have a very good support from the government, and we have a very good pipeline in terms of our clients. It's just one of the support that we get from the government. Obviously, when it comes to ECAs, the one important aspect is to make payments, pay claims on time. So from that perspective, we don't want for our clients to struggle with their liquidity. And from that perspective, we are aiming to squeeze in our timeline in terms of making payments on time. It's just something that we can control internally. It's our main criteria for our effectiveness going forward for this year and years to come. Thank you.
Thank you very much, and it's great to see that you're really doing something about the SME sectors, because really that's where the jobs are, and we all need to provide jobs for our young people so they have a perspective. That's so important. Now I have a question for the global banker here, Mr. Gargiulio. What is your strategy in the CIS region and beyond the short-term pandemic, right? We have the pandemic, but looking forward the next 5 years, 10 years, what is your strategy? Do you have a specific sectoral focus? And what about your plans for the sub-Saharan African region as well? Because there's a lot of people and a lot of potential for business there.
Thank you, Cornelia. Good question. As you know, ICBC is the largest bank in the world by assets, but our other shareholder is the biggest bank in Africa, and therefore we have huge interests in both the regions. Starting from Russia CIS, we've always been present in Russia through the years, but Central Asia was an area that we hadn't really developed until 3 or 4 years ago, and our plan is usually in most of these countries, what we do is we start working, because we don't have boots on the ground all the time. We start working through the local banks, and therefore we create this local but international blend that works quite well. You mentioned, I think, towards the beginning, the role of ISEC as a catalyst. And indeed, that's what it is for us, because in our strategy, when we work, we obviously have restrictions on the amount of capital, on the amount of balance sheet that we can deploy. But that doesn't mean that there aren't fantastic opportunities in many of these geographies, and huge growth opportunities. So what we do is we partner together, and this allows us, day one, to be a much bigger participant, and then eventually, through our very large network, international network, we bring in other partners, which might be investors, as I was saying before, from other geographies, or other banks. So our strategy is always quite sort of in terms of developing. We start with the banks, usually the state-owned banks, and then we develop from there. And our feeling is that by providing finance, as Mr. Aisi said before, we provide finance, for instance, to large state-owned banks, but those facilities usually are for funding the SMEs. So ultimately, our credit is getting to the right stakeholders, let's say. Sub-Saharan Africa, we are, through our other parent, Standard Bank, we are extremely present, and we allocate a lot of balance sheet. We tend, once again, to work quite closely with the big banks and the central banks. But as Standard Bank, obviously, we also work extensively with the corporates, and we aim not only at this time of crisis, but to continue that work.
That is really very important, and And that's very good. And I think you just illustrated how important organizations like ISIC and specifically ISIC are, because not everybody can be on the ground everywhere. And the regional development banks or like IDB, sort of also regional in many ways, have those long built traditions, those informations, as Mr. Casey pointed out. So I think what we've seen there is very important. And I now we're running out of time. I have so many questions. Well, between 200 and 300 people, they have lots to say. I would like to ask a last question for Mr. Amin, and you need to be very concise because we have a hard stop, and I still need to give a summation, give you a little, the 3-4 points that were most important. So, Mr. Amin, how has the pandemic affected your project finance pipeline? Where do you see Bank of Africa focusing on the continent in terms of geographies and sectors over the next 2 to 3 years? So, Mr. Amin, we're going over to you. Mr. Amin, you need to unmute.
Sorry about that. Can you hear me now?
Yes.
So indeed, Bank of Africa has driven a new strategy in regards of the involvement in financing project investments. In this matter, we are focusing on our extensive network, especially to our Bank of Africa network in Sub-Saharan Africa. And in regards of project financing, we are more focusing on financing infrastructure development, sustainable financing in favor of counterparties to our network for local financing, but also with hard currency to our subsidiary in London, BMC Bank International PLC. For the upcoming years, we are confident on our capacity to play a major role in facilitating trade, but also in financing project investments for sustainable development.
That is excellent. Thank you very much. So look, I think we've just learned so much from the repository of knowledge and wisdom that we had in the virtual room here on the virtual podium. But I think it's great to hear from you. So allow me to give you just 3-4 key points that I've heard. ISIC clearly rose to the challenge during the pandemic, and helped finance healthcare and so on. But Mr. Casey pointed out it's not just a pandemic. We need to build back better. We need to build back more sustainably. And we need to achieve the 17 Sustainable Development Goals, and that's where ISIC really takes a leadership role as a catalyst to help, banks and other banks use their balance sheet and transactions get done. Intra-OIC trade is obviously very important, and ISIC, as does the IDB as a whole, has really this intra-OIC cooperation is very, very important. We heard His Excellency Minister Ott tell us, how grateful he was to ISIC for helping him to attract financing at favorable rates, because the going is getting tougher out there. And he also mentioned that extending the tenor is something that they can do well. I was very impressed by Kazakh Export when they said, they moved very quickly offline, and we're really sort of a best in case scenario there. What I also found very interesting is the focus on SMEs, because again, SMEs are so important. Without SMEs, we don't create the jobs we need for our growing populations. Lastly, very importantly, Mr. Gargiulio pointed out, from a global perspective, you have a large balance sheet, but you have balance sheet constraints. You know, regulators will let you do so much. So having institutions like ISIC support them is very important, and also in terms of the information exchange, because not every institution can have boots on the ground everywhere where they could do business and help the development of the country. So in that sense, again, ISIC is great. And the last thing I would like to see, we have seen how all these three institutions there are expanding their cooperation with ISIC. And I've spoken in the lead up to this seminar or this webinar with many institutions, and this is the tenor. I mean, Mr. Kaisi, you are the most favorite person in the room here. This is great, the great position to be. So now, excellencies, ladies and gentlemen, dear participants, thank you so much for your time and for your insightful comments and for interactive engagement. I have certainly learned a lot from the repository of knowledge here and from the great questions. I hope you have too. I hope you found it useful, which is why I would like to encourage you to go on the link, fill out the questionnaire, give us your survey. We'd really like to know how you think we've done. And we would also like to see, we just value your opinions. So with that, sadly, all good things sadly come to an end at some stage. This webinar is coming to an end. Let me thank you again for your really valued participation. Let me thank our esteemed panelists for the wisdom they were so freely willing to share with us. And so without further ado, I have to say, I bid you farewell. Ma salama.